Hello investors and welcome back to my weekly update on my real money portfolio, and this time for the week 20 of 2021. In this video I want to go through the Tencent Q1 earnings, which was reported last week, go through my transactions, my sells and buys last week, the received dividends and my performance as every weekend. So let's go. But before we start, don't forget to subscribe and follow me on my road as a long-term value investor. Thank you. Tencent, my second holding from China in my portfolio, reported their Q1 earnings this week, and I want to go through these numbers and take a look at what they reported and what to do with these numbers. Therefore, I go to an article of Reuters. Chinese gaming and social media giant Tencent Holdings reported a forecast-beating 65% rise in quarterly profit on Thursday. Tencent, the world's largest gaming firm by revenue, booked profit of 47.77 billion yuan for the 3 months through March, higher than the average analyst estimate published by Refinitiv of 35.45 billion. Tencent also said on Thursday the company is investing in business services, games and short-form video content. Tencent, which gets 32% of its revenue from video games, unveiled more than 60 new titles at its annual video gaming conference last week. It is looking to launch a mobile version of its League of Legends game and also a Pokemon game in partnership with Nintendo later this year. Revenue rose 25% to 135.3 billion versus market expectations of 134 billion. So overall, good numbers, I would say. Better as expected numbers. Revenue is in line, so everything's fine on the business side. And when we look at the different sectors, then we see that the Tencent gaming sales growth slowed to 17% from a COVID-19 high. There is a slowdown in the growth, but still a growth with 17%. This is quite good and maybe not comparable with the high COVID period when, of course, a lot of people just stay home and play all these games. So 17%, I would say, is still a very, very good growth rate. And even better, the fintech and cloud units grew even faster. They grew almost 50%, which is the highest growth ever for this sector. So overall, very, very positive numbers they posted last week. But nonetheless, the stock reacted negative on it. The stock went down from $79 this week to currently $74.60. And so my position, which I bought a few weeks ago for $74.85 in average, is just in the minus a little bit, 0.33%. This is not a big deal because on the business side of things, everything seems fine. The big problem with the Chinese stocks right now or at all is just there is not a lot of trust because you never know what the Communist Party will do next when you see the high fine that Alibaba had to pay, and also of course Tencent is in the view of the antitrust policy of the Communist Party. So this is kind of uncertainty and the market don't like uncertainty. But overall on the business part, this is for Tencent, but this is also for Alibaba. Everything is fine. The things grow, they grow fast. So no need to worry from the business side of things. Then take a look at the transactions. But I'm sorry, no transactions last week. There was no buys, no sells. A very, very quiet week. So then jump to the dividends. And last week I received my dividend from Caterpillar, and this was $12.26. And I received this dividend even if I sold Caterpillar already on April 26 for $230.90. And this was quite a very good trade because I bought my shares. You can see here on the green dot, I bought my shares around $115 and then sold just for the double of $230. So very good trade, and now I also received a small dividend. Then take a look at the performance of my portfolio. And first of all, take a look at all of my positions in my portfolio, and you see Imperial Oil still the best performing stock, followed by Legend & Plaid, JP Morgan, Bank of Nova Scotia, Facebook, and so on. And as we saw also before, Tencent and Alibaba, the only two in the minus right now. They're really weak over the last few weeks. But as I said before, no need to worry yet. Tencent, for example, will maybe go down a little bit more. Then I will pick up some more shares because both of these companies are relatively cheap and have a very, very nice business model. Then take a look at the performance compared to the S&P 500. And let's start with the performance of 2021. This is from January to now, year to date. And in this time span, my portfolio gained 19.45% compared to 10.64% of the S&P 500. So around 9% outperformance over these, let's say, almost 5 months. Very good, very nice. And even better is a picture when we look at the long-term performance since the start at the 2nd of December 2019 of my portfolio. There I have a performance of 69.14% compared to the S&P 500 of 33.46%. So almost 36% outperformance, which is amazing for me and which was really a big step to financial freedom over these, let's say, 1.5 years. And if you like this whole idea of the long-term value investment, and if you like the channel and find some value here, then please like, share this video, subscribe to my channel, and follow me on my road as a long-term value investor. And then you will get every weekend my weekly update on this portfolio with every transaction, dividends, performance, full transparency here. And you will also get 1 or 2 videos with stock analysis, mostly from North America, but also from Europe and the rest of the world. So that's it for today. Thanks for watching. See you the next time. Bye bye. Take care.